Hello folks, let me start by caveating this one and telling you that I'm not an accountant and you should speak to your accountant before you buy a vehicle personally or put it through your limited company. Very important that you do that just to make sure you're doing it the right way and the most tax efficient way. Now this video is correct to the best of my knowledge and I've done a fair bit of research on it, but I must tell you to please speak to your accountant, alright? Don't take this as read. So should you buy a car through your business, through your limited company and take it as a company car or give it to a member of staff as a company car? Well, quite often, that's not a very tax efficient way of doing things. Yes, if you have a car through your business, you can write off the cost of things like tyres and servicing and all that kind of good stuff, insurance, etc. However, the person that has that car on a daily basis, whether that be you or an employee, is going to get hit with benefit in kind, also known as company car tax. That basically means that the HMRC will look at the cost of that vehicle, and that's not the amount you paid for it. If it's a used vehicle, it's not the amount you pay for it, it's the amount that that vehicle, the book price on that, it's the book price on that vehicle when it was brand new on the forecourt. So if you got a £10,000 discount on the car, doesn't matter. It's the book price on that vehicle, so the official list price for the car. Depending on the CO2 emissions figure for the car, the official CO2 emissions figure, that governs how much benefit in kind you're liable for. And it means that although the company gets to pay for all those things I said before, you as an individual get hit with quite a harsh personal tax bill. That's usually the case if it's petrol or diesel cars, not quite so bad on some plug-in hybrids, some are not too bad, but electric cars are absolutely the way to go if you want to put a car through your business. Now, there's something quite special with electric cars at the moment as well, which is that if you buy one, like actually pay cash for one, you can get 100% tax relief in the first year. So let's say you buy a car for 40 grand and you pay 25% corporation tax. In effect, you're going to save 10 grand in corporation tax in year one. You're not going to save anything in the subsequent years, but in year one, you're effectively able to write off a big chunk of money. If you buy a used car, a used EV, it's going to take you 5.5 years to write off that amount of money. Simply because you're only allowed to claim 18% a year if it's a used one. And don't forget, it's not like you're writing off 40 grand off your tax bill. You're writing off the tax you would have paid on 40 grand's worth of profit. A lot of people will be wondering about VAT. It's not as good as people think. People think you just get 100% of the VAT back and that's the end of that. You only get 100% VAT back if the vehicle's used 100% for business. So that means you've got no personal use on the insurance. It's a very difficult thing to do with a car. People used to get around this by having pool cars, but 9 times out of 10 a pool car ends up going home with someone. Speak to your accountant about it, but that means effectively it's not a pool car because your journey to work and back is not a business trip, it's a personal trip. But speak to your accountant about that. But I think the pool car thing's very muddy water. If you've got an estate agent and you've got a smart car outside that 10 people use to go and show people properties, that's a pool car. Having a car that some people might use during the day and then you take home evenings and weekends is not a pool car. But if it's 100% business use, you can get your VAT back. If it's also used for personal use, you can get 50% of the VAT back. Okay, very important thing to remember. If you're leasing a car rather than buying it, effectively you're writing off your upfront payment and your monthly payments as you go. And again, you might be able to claim back 50% of the VAT if it's mixed use, as most cars will be. And that's that. I'm not touching on vans in this video, by the way. There's a different can of worms, kettle of fish. So if you still want a petrol or diesel car or a hybrid car, quite often it's more effective to just buy the thing personally and then claim back mileage, business mileage from your company. Now you need to keep a decent mileage log. So every day when you get in the car, just have a little spreadsheet or an app or piece of paper, whatever you want to do, and you just put the date, where you're going, why, how many miles you're doing, and it's really as simple as that. And then you can claim the money back as expenses from your business at the HMRC approved rates. At the time I'm recording this, I think it's 45p a mile for the first 10,000 miles and then 25p a mile after that. But double check, you know, these things change regularly. So probably if you want a petrol or diesel car, it's not worth putting through your business right now, from everything that I'm aware of. Obviously, I don't know your business circumstances, I don't know your accounting circumstances, anything like that, which is why I'm going to tell you again to speak to your accountant before you do anything. But if you're in the market for an EV, right now, at the time I'm recording this, which is May 2024, it still looks like a fairly decent option to put an EV through your company and take it as a company car. However, as with all things in life, once everyone jumps on, at some point the numbers are going to creep up and up. They already are. You know, benefit in kind on EVs is already going up. It's still pretty decent, but it's going up. And I dare say in 3 years, 4 years time, it'll be completely pointless, and you might as well buy the car privately and claim mileage from your company, whatever that's going to look like on an EV. So keep that in mind. This might not be a long-term thing. If you're watching this video in the year 2030, it might be a terrible idea to do any of it. And really it's a case of making hay while the sun shines, particularly if you want to get an EV and put it through your limited company at the moment. By all means, you can enjoy these benefits while they're around, but just be aware that they're very unlikely to be around forever. I hope you've enjoyed that video, and I hope you found it somehow useful. I'm not an accountant. I'm going to say it again. I've said it a million times. So don't ask me loads of questions about it. Ask those questions to your accountant. Your accountant knows your business far better than I do. And they've got a far better grasp of the sort of bigger picture and everything. But I just wanted to give you an initial sort of quick idea for the people that are constantly asking me about these things. And I must say, when people do ask me, all I say to them is speak to your accountant. But hope some of you have found that useful and it's given you a few ideas. Vans, as I said, are a completely different thing. Again, speak to your accountant about that. But more vans are used for 100% business use, and you know, it is a bit of a different kettle of fish. Benefit in kind works differently on those too. But hopefully that's given you a little bit of a starter for 10, and hope you've enjoyed it. Please give the video a thumbs up. Please subscribe to the channel if you haven't already done so. I'm looking for that big 50,000 this year, and I'd love you to be one of them. Now, if you want to learn more about company car tax, watch this video that's popping up on the screen now. It's a couple of years old, but hopefully it's still fairly useful. Catch you soon.